This next chapter solves the mystery. Let's dive into the essential setup now. Step 1: The essential setup. Chapter 2: Hidden credit reports. Equifax, Experian, and TransUnion aren't the only sources collecting and selling your private information. They are the big three, the main credit bureaus everyone talks about, but there are other companies that creditors use to uncover hidden information about you. Banks, mortgage lenders, auto loan lenders, credit card issuers, and others check your identity and credit with additional sources. They check your background with other data collection companies too, and this is how they discover information, and sometimes misinformation, you did not even know was out there. Check out these facts about lesser-known credit sources. One of them is owned by TransUnion, so of course, they share information. One of them targets people who have had past credit issues and focuses on collecting more info about them. Two of them are hand-in-hand buddies, sharing everything, so if want clean credit, you've got to communicate with them both. One claims that they can predict how you'll handle credit in the future based on your personal habits that have nothing to do with your payment history. They say they've got the crystal ball on your future financial behavior. I bet you'd like to know how they do that. One gets their information straight from the big mortgage money providers, Fannie Mae and Freddie Mac. This sounds like reverse engineering turned into circular reasoning, doesn't it? One gives hidden information that does not appear on any of your 3 credit reports to mortgage lenders. This is how loan underwriters discover information about you that you thought no one knew. For example, an offbeat mortgage lender that never reported to the credit bureaus, an off-the-record foreclosure, or a tax lien that's not on any credit report. Completing a wide, clean sweep to get all of your personal information corrected and consistent is worth the extra effort. It takes time to acquire these additional reports, but you are not saving yourself any time if you don't get the desired results. It's not unusual for the top credit repair specialists to spend 6 weeks getting their clients' personal identifiers cleaned up with both the major and minor sources before they launch any challenge letters. In the big picture, this saves time, postage, and prevents discouragement. You read the first book in this series, and you have your 3 main credit reports dated within the last 12 months, so now is the time to order your additional reports. Do this before you send any, or any more, dispute letters. Let's go deeper and clean up your personal identifiers with these other sources. Personal identifiers are the facts about you personally: name, social security number, date of birth, addresses. For additional credit report sources. 1. Innovis. This is the 4th credit bureau in popularity, right behind Equifax, Experian, and TransUnion. It began in 1970 and has been collecting data on consumers ever since. They are fast becoming a major player in the bankruptcy scene. The mortgage giants, Fannie Mae and Freddie Mac, report data on home loans to Innovis. 2. LexisNexis. This is not a credit bureau, it is a data service. Think of them like a Snoop and Tattle company. They gather all kinds of information on you and then pass it on to creditors to aid them in deciding whether or not you are a good credit risk. LexisNexis is a major source for providing information on unpaid taxes, judgments, liens, and bankruptcies. Mortgage lenders may use them just to double-check for items that don't appear on their tri-merge credit report. Make a mental note that LexisNexis is not the original source of anything. They collect info from other sources and pass it on. You tell me how reliable Tattletales are. You definitely want to get your LexisNexis report if you're cleaning up your credit. 3. SageStream LLC. SageStream is a real credit bureau, and you'll never guess who owns it. LexisNexis. So whatever obscure information or misinformation that is lurking on LexisNexis, you can expect to also appear on SageStream. Who uses SageStream? Automobile lenders, utility companies, cell phone services, retail stores, and credit card companies. Thus, it is important to make sure all the information reported about you is accurate and current, including your name spelling. SageStream has its own credit scoring system. They don't use FICO or Vantage scores. Their scores range from 001 to 999, different than all the other scoring systems. I'm guessing that since they couldn't tap into the FICO secret, they decided to go way off the beaten path so no one would mistake their score for a real credit score. Mortgage lenders do not use the SageStream score. 4. Clarity Services. If you have below prime credit, Clarity claims they have the crystal ball on your future. I'm not exaggerating or being funny. Their website tells lenders they are the crystal ball in predicting whether or not a person with subprime credit will pay their bill in the future. This is no small company either. Clarity owns the largest subprime database in the industry with over 62 million consumers. It can be difficult for a lender to make a determination, approval or denial, for the person who had late payments in the past but says they are back on track now and will pay in the future. That might be true, but how does a lender know if they can trust you? Clarity Services says they clearly see into your future. Unlike all the other credit bureaus, they don't judge the risk of lending to you by your past payment history. They say analyzing past payments is not the most accurate way to score people with imperfect credit. Their crystal ball looks at something different. It's all very interesting. Clarity focuses on your financial stability and on your personal stability. What exactly do they mean by stability, and how on earth do they do that without coming into your home? Here are the criteria they analyze to determine stability. Are you hopping around from one address to the next with frequency? Or have you settled down to one stable address for at least 2 years? More years is better. Are you changing jobs frequently, perhaps getting fired or being unreliable and not showing up for work? Or is your employment stable and solid for a good length of time, at least 1 year and preferably more, and not changing every year for the past 5 years in a row? Have you made numerous applications for credit recently? When there are a lot of inquiries for credit cards, that doesn't look good. Why would a person need 6 to 10 new cards, for example? Are they on the brink of going into big-time debt? Have you made many applications for a mortgage, perhaps applying all over the internet, hoping someone will take a chance on you? That doesn't look good. It's normal to shop 2 or 3 mortgage lenders, but shotgunning out applications makes it look like everyone is turning you down. Did you take a payday loan or one of those storefront loans? Only desperate people in desperate financial situations get sucked into those horrible, expensive loans. People with stable finances and good credit consider those loans to be toxic, as they should. Even if you took out the loan for 2 weeks and then paid it back 100%, the fact that you went to one of those shady sharks looks bad on your credit report and can lower your FICO score. According to Clarity, people who have long-standing jobs and addresses but fell on hard times temporarily that resulted in late payments are not a bad risk for lenders. They are trustworthy people who went through a temporary slump. On the other hand, people who change homes a lot and who apply for a lot of credit are more likely to be flaky and unreliable and vanish before making all their payments as agreed. If your credit is imperfect, you'll want to look at your Clarity report. ChexSystems. Legally, ChexSystems is a credit bureau. However, the report is not based on credit, but rather on debit. This report many people don't know exists. Title reports reveal information to mortgage lenders. On the topic of how did they find that, I should explain something about title reports. When you apply for a purchase loan or a refinance, the bank or mortgage lender orders a title report from your designated title company. Oftentimes, information shows up on title that was not on the credit report. For example, past foreclosure or short sale, bankruptcy, tax lien, lien from a construction company, remodel company, roofing company, or anyone who did work on your property who never got paid, or they did get paid, but they neglected to remove their safety lien when everything was done. Lien from an unpaid attorney bill or other professional service. Judgment for an unpaid bill, including a credit card. This type of negative information can be attached to your Social Security number and follow you even if it doesn't appear on your credit report. This is why it's best to be forthright about any negative financial events that occurred in the past 10 years. An experienced loan officer can check it out with one phone call to a title company and then advise you on the best course of action. Additionally, falsifying a mortgage application is felony fraud, so don't be tempted to try it. If you had a foreclosure in the past that does not appear on your credit report, discuss it with your mortgage broker. The big advantage of not having it on your credit report is that you will have a higher score and qualify for a lower interest rate. By telling your loan officer upfront, they will know what type of loan, FHA, conventional, non-QM, that you can qualify for based on the date of the negative event. Your mortgage broker is your advocate and ally. To be clear, you do not order your own title report or dispute information with a title company. You buy title insurance when you get a mortgage, as part of the closing costs, and the title company insures your title against false liens, errors, mistakes, and everything else that could threaten your ownership. They are the ones who will get any false items removed. So, this is not a to-do item for you, it is simply an explanation of another source of information about your financial history. Coming up next. While you're waiting to receive all your credit reports, take steps to create positive credit or to strengthen your existing positive credit.